before we get into it today, everything you see on this channel is for educational and informational purposes only. Myself and the Blueprint do not provide any financial advice, investment advice, or trading recommendations of any kind. All trading revolves in significant risk. You could lose more than you invest. Always do your own research and consult a licensed financial professional before making any trading or investment decisions. Let's get straight into it. Welcome everybody. Today we're going to be going over my advanced risk methodology and how we can use this to get funded fast. So let's run through quickly what is our advanced risk methodology. So advanced risk methodology means utilizing a prop firm's risk rules to kind of just maximize how much we're making and pass the firm as soon as possible, basically. So basically, in the most simple terms possible, we're full porting, but not exactly full porting. So let's kind of go over it. So one, we're going to be, let's say we're going to be using an Alpha Zero account. Alpha Zero 100K. One, max daily loss limit 2K, and then overall loss limit 4K. So how are we going to pass this in two trades basically? If you're trading normally and you're not just using the CPI method, what we're going to want to do is we're going to want to maximize our max daily loss limit as our overall stop loss. So if you don't want to do exactly 2K, you can do 1900, just because that is just a little bit of an easier number to work with, and so you don't get breached if the account does get slipped or spreaded. So we're going to be using 1900 per stop, and then this basically gives us two trades for us to completely leeway our funded account, our funded eval. So you only really want to be taking A pluses on this, right? I usually do low risk to reward and then high win rate systems. So this basically means I'm targeting maybe 1 to 1, 1 to 2, not even 1 to 2 most of the time, just 1 to 1, 1 to 1.5 to maximize the system as much as possible. So that's what we're going to be doing. We want to be doing A plus only, because if you're taking B tier setups, then it's not going to be great, because you're risking double the normal capacity of what you're normally already risking. And if we're trying to pass this fast, we want to do it in the right way possible. You can just kind of slap this on any setup you see, but likely chance that you blow it a lot sooner is going to be a lot more likely. Whereas if you're just doing it on a normal account, you'll be sweet. And our target is, what's our target? Target 6K. 6K. Target 6K. So basically, let's say we're doing 1900 and we're taking a 1 to 1.5. What is that? I think just under 3K. 1900 times 1 to 1.5. Yeah, just under 3K. So basically, two trades we pass. If you want to take 1 to 1.2, that's going to be still two trades. If you want to take it in 1 to 1.3, no, 1 to 3, sorry, then yeah, maybe. If your system allows you to trade 1 to 3s and you've got a decent win rate with it, then definitely do that. If not, I'd personally stick with a lower risk to reward to just maximize your win rate, to be honest, because you just want to win as much as possible so you can just get straight to the funded account. Cool, so I'm going to leave this in this corner. I'm just going to copy this and slap this in there. Great. I'm actually going to copy this because we're gonna go back test this week's London session. So this week was Sunday, 22nd March. Let's go to NQ. Beautiful. Paste this. I'm just gonna slap you in the bottom. Sorry, pardon me. And I'm just gonna run you guys over my rules really quick. They're nothing too difficult. It's a very simple break and retest system. Just give me 2 seconds and I'll run you guys over it. Actually, I'll do it now. Why not? So my first rule is essentially higher time frame area of interest. So that's going to be FEG. Oh, I'll type it out after. So wait for our higher time frame area of interest. Scroll to lower time frame. Wait for boss. 3. Wait for lower time frame area of interest. 4. I see entry. So this is honestly very simple. If we have a trend which we can identify, we want to be aligning that with our higher time frame area of interest. But to keep it very simple, it is literally just higher time frame area of interest. Wait for that. Wait for area to get tested. Wait for the area to get tested, and then scroll to your lower time frame. Wait for a break of structure, and then wait for a lower time frame area of interest, and then IC entry. I'll run you guys over IC entries when they do come up. Cool. Let me just run over a little bit more basics. This is nothing crazy. My areas of interest are my higher time frame and my lower time frame are fair value gaps, order blocks, liquidity sweeps, and then this only applies to my higher time frame, which is a session sweep reversal, or SSR, like I like to call it. This is basically a liquidity sweep of a previous session high or low. So I would just call it SSR because it sounds funky and original. Cool. So let's go straight into it now. Monday 16th in Sydney. London session starts around, what time does London session start? Starts at 6 o'clock, so we're going to be going straight to 5:45, so we can just do our 15-minute pre-market analysis. Great, so let's go to the 1 hour. Let's see what we're doing. Great, okay, relatively it looks like we're trending short at the moment, and Asia has, you can kind of see that we breaking down still. So this over here looks pretty nice. Anything on the 4 hour I want to look at? I mean, you got this huge 4 hour order block, but it's probably encapsulated a little bit better with this 1 hour gap here. And then if I wanted to do, that's a little large for me, to be honest. So I'm not too keen on that. All right, great. This works. So this 1 hour and this 30-minute share a fair value gap, which is pretty good. So let's write this 1/30. So you guys know that this is our 1/30, and now let's look at our session highs and lows. So pretty nice. You got Asia highs, and then you've got Asia lows. Beautiful. So now this is kind of what I'd consider a golden area. In my idea, a golden area is where there are two higher time frame areas of interest aligned in one. So that could be a fair value gap and even an order block, right? So this would kind of be an area of interest right here, a golden area of interest, like these two. Or you can also say Asia highs and this fair value gap right here. So that's a perfect example of a golden area for me. And now let's wait for 6 o'clock. Great. All right, great. So usually what I also don't like to do is I don't like to enter in before, anytime before 6 o'clock, because that's just pre-session and I'm not too keen on that. And when the session starts, we could just instantly reverse. Okay, cool. So this is Asia highs. This is our last breaker structure up. So I'm essentially just waiting for our protected low here to get taken, reacting off of Asia highs and this shared gap up here. So let's see what we can do. Okay, great. So I can kind of see, yeah, much better. So I'm just gonna delete this. I'm gonna mark this out as SSR because this was Asia highs. Great. So what I can see here coming into it, our protected low got taken by a wick. So technically this is a false breaker structure because what does this look like? This just looks like a liquidity sweep. So for me, I'm just going to look, you can either label it a liquidity sweep or you can label it a false breaker structure. I'm just going to do false for now. And then you can clearly see that we've got a nice break right here. So we've got our higher time frame area of interest. We've got our lower time frame breaker structure aligning with our higher time frame area of interest. Now we need to wait for our lower time frame area of interest. Okay. Fucking golden. So now, pardon me, sorry. We've got our lower time frame area of interest. I will be using this gap. You can even use, it's not really visible, but you can see there's a gap right here too. And you can also see that there's just this little order block right there. So that's fine. Any area of interest is valid, regardless of what it is. It can be an order block, fair value gap, it doesn't matter. As long as there is one there, that is all that matters. So Now let me run you over what IC entry is. IC entry is essentially what I'd call an impulse and a correction. Our impulse is the area that creates our area of interest, whether that be our fair value gap, whether this be an order block, whatever it may be. Usually it's mostly fair value gaps and order blocks. If we do get a liquidity sweep on the rare occasion, it's just going to be a sweep of the low that created our leg up. And our correction is the leg that comes to test our area of interest, whether that be our fair value gap or that be our order block here. So you can put your stop loss at either place. Let me kind of just go over it now on what it is on this. So on this, you can kind of see that our leg down on the 1 minute clearly starts from here, because you can see that this is our area of interest here, and then you can see there's one also here. And then if you wanted to include this order block, you would put your stop loss above here, because technically this is part of the impulse, because this is what this down move has created, this order block. So now this is our area of interest, which has also been created. So it does depend what you're basing it on. You can put your stop loss up here, you can put your stop loss over here, and you can put your stop loss over here. So our impulse leg would be these 4 gray candles down. If you wanted to include this one, you could. I'm not going to. And then our correctional leg is going to be this one blue candle coming back up into our areas of interest. So another thing about this, the candle coming back into it does not necessarily need to be opposing. It doesn't need to be like blue, as you can see. As you can see, this is a bearish leg down, but you can see this is a bullish leg up. Let me try to find an example where it is not a bearish. So let's say we're trending up. Okay, there's not really much. There is not really much. Okay, when we find an example, I'll point it out there. But let's go over this, right? So now, IC entry. What I want to do, I want to be entering at the low, and I want to be protecting the highs of the area. Either you can do up here, or you can also do down here. For the sake of the example, I am just going to do here. I'll do 1 tick above, just because sometimes it does create equal highs. And you might be asking, Dev, why are you doing it at the low and not this fair value gap right here? Cool. I am a continuations-based trader. I like to see price continue in a given direction. If I am setting my entry here at this fair value gap, price can just tap into this gap and then continue running off from here, based off of if there's lower liquidity here or yada yada, whatever, right? If price wants to continue going down, it's gonna have to come down past this point and then continue going down. Most of the time, if it's gonna come down into this price point, it's gonna come down and then continue going down. Whereas if it wants to start going up after it sweeps me out, I happen to call it the end of the trend, and that's absolutely fine. That's the best way I like to get stopped out. So let's set an order. Actually add order because I need to figure out 24, so that's going to be 4 cons. Sell, because we're trying to do double our risk. Great. And then for the sake of this example, let's do 1-to-1s because we want to just get this good. And is there any, and you can also see there is intermediary lows right here. So internal lows, as we can also call it. So let's say we moved it to here, and you can have it a little bit tighter as your stop loss like that. You can definitely do that. So let's do both. Why not? Why not? We'll have one here, and then we'll have one here. One a little bit larger at 24, and then 99. Great. So let's remove this. All right, so this is 18-point stop. This is a 24-point stop. This one is directly targeting this liquidity right here, and this one's targeting just a little bit below. Because usually we do react off lows. If it's not going to be this low, we're probably going to react off that low, or even if there's like liquidity in between. Sorry, I yapped too much. There you go. You got liquidity right here, so we can potentially bounce off this 5-minute gap to continue going long. It's not always given, but liquidity does one thing, and that provides fuel for the market to go in a given direction. So let's just play this out. Let's see how we go. All right, we're tapped in. All right, wait, let me set a stop loss. Oh, it's only 1500. All right, well, great. We're going to set our stop up there. Okay, 2000. So this is going to be a little bit larger. We got slipped into this, as you can see. So this entered us a little bit shorter than we would have liked. Great. So as you can see, this one worked out perfectly, and so did this one. Protecting a little bit larger of a stop was absolutely fine. And you can see protecting the smaller stop was absolutely fine as well. We got slipped into this. I just incorrectly put the amount of contracts on. So yeah, +1 for the day. We are 2K into our 6K target for today. So, as you can see, the low risk to reward, high risk, low risk to reward, high win rate works pretty well. So what I'm going to do, I'm just going to keep a little tally in this. +1. Well, it's going to be +2 risk all the time. We just need to get this to +3, so it's going to be absolutely fine. So very good. Let's move on to Tuesday now for this. Is there anything else I need to delete? Horizontal ray rectangle. There you go. Select date. Today, let's go to Tuesday. Same process all over again. We're going to be doing the exact same thing as we did on Monday, as we're going to be doing today. I don't really like to change my system because this works for me. And if something works, why change it? Is this the right date? No, it's not. Tuesday, 45. That is nasty. All right, what am I looking at? So we got contract rollover. Is there anything on the daily I could be looking at? All right, reacting off this daily gap in here. Okay, there's an hourly gap in here as well. Not bad. Double sponsorship. Don't call me Red Bull though. Red Bull, if you want to sponsor me, go hard. All right, great. So my only iffy thing is we are in this huge opening range right here, because this is I think this was from contract rollover from the expiring contracts, which expired today. So this is the new contracts. Honestly, we should probably look, if this is to hold, it's probably going to hold, but realistically I want to kind of see us go short of this. Let's see what we can kind of do. We are on the 15-minute. 6 p.m. hasn't started yet, so it's all good. Now let's mark out Asia highs and lows. Great. This is a pretty easy target. I would like to see overall kind of just tap into this area here and then come into Asia lows. And then if we want to reverse, you've got Asia lows here. You've got, this will turn into a golden zone then, because then what you've got, pardon me, you've got this opening gap here. You've got Asia lows. So this will create a, what would you call it? A golden zone. Two areas of interest aligning, golden. So if we have to reverse anywhere, it will definitely, most likely be from Asia. There's no definites or 100% in the game of trading. It's all a game of probability. Okay. That's what a lot of people don't understand. They're like, this has to work, this has to work, this has to work. This doesn't have to work. Trading is simply just a game of probabilities. If you're thinking, if I don't make this work, I'm cooked, I'm cooked, I'm cooked, you're cooked before you even got into the trade. If you're taking every trade like it's your last trade, you're psychologically not going to be in a position where you're taking correct positions. You're thinking in a sense of fly or die. And if you're thinking in a sense of fly or die, you're probably going to be taking suboptimal trades. Whereas you think, if I lose this trade today, did I follow my rules? Great. Did I do everything correctly? Great. Is there something which I could have potentially done better? Okay, let me have a look. And then once you've kind of gone over all of those things and you've evaluated that, all right, maybe I did make a mistake doing this thing, you can come back tomorrow and do it a little bit better. Whereas if you're in a ride or die situation, then you're going to be like, well, shit, now I have no account. I blew my account. I'm broke. I needed that to work. It didn't work. And you're probably not going to even evaluate why it didn't work, because you're just thinking this needs to work instead of why did this not work and how can I do better? So yeah, let's kind of go back straight into it. So this is kind of my protected high area, because I can see on our lower time frame, this is our last breakdown. Everything in here is a little bit internal. People might consider this or this as a breakdown. I would not. That's kind of just the leg going down. If you want further clarity, you can even look at other time frames. Even on the 2 minute, you can see that this is a nice breakdown. What about a 3 minute? Yeah, 3 minute, I would not even mind. All right, great. So now that we know that this is our protected high, I'm just gonna draw this right here. And 6 p.m, great. So anything before, we can tap into this gap. Okay, so this is 6 p.m. All right, well, we kind of just ran through that gap. 30 minute? Oh, great. Okay. 30 minutes got a lot larger of a gap, so I'm just going to use the larger gap. Because we can come halfway into the 30-minute gap and then just turn around from there, so that's all goods. Only thing I'm not really liking too much though is this pressure coming into it, but that's fine. So now we have a breaker structure up. Now we need to see. Come on, Chief. Okay, great. So this, okay, beautiful, very nice. This was a breaker structure up. This is a new breaker structure up. So now we have protected lows here. I'll draw this all out in a second. Slow down, slow down, slow down. So this is our breaker structure up. Our protected lows now get taken. And then you've got breaker structure down. As you can see, I'm doing this all on external price. You didn't see me marking out anything internally here. Like, yeah, in this case, it would have worked out break, break. I don't even know if that's a break. No, that's a wick. But then you can also say that's not a break, but you can say that's a break. And then internals, like, you can say that's a break, that's a break. When you're marking out on internals, you get very confused. I don't know, some people can do it, but in my opinion, it's just very confusing. It's not the best way to mark out things. You want to just be sticking with external stuff, because that's just going to keep everything super clear for you. And that's how trading should be. You don't want to be using unnecessary, confusing things like internals, this, that, blah, blah. Like, if it just doesn't make sense to you, it doesn't make sense to you. The whole point of this is, if it works for you, it works for you. You don't want to be using concepts that are basically like, someone said standard deviation, inversion, reversion, whatever, right? If it works for them, it works for them. But if you can't look at this on a daily basis and be like, what am I looking at? How am I supposed to actually apply this? Then you're going to be like, well, I probably won't be able to do this long term, and you'll give up. So there's no point of that. Use easy concepts which you find easy for yourself. Like, I don't trade inversions, but someone might have taken this inversion here. I don't even know if that's correct, but this could be an inversion someone could have taken and be like, yes, very good A+ setup for me. But for me, I don't even know if that works. But then again, you can also see there's another inversion right here. Like, that could have worked for someone else as well. So it's all about what works best for you. Great. So coming back to our trading, higher time frame area of interest, we can see that we have this 30-minute gap here. We have our breaker structure right here. Now we're just waiting for our lower time frame area of interest and our IC once again. So let's kind of play this out. All right, perfect. So you can see we want to be entering here, and we can protect here, or we can also protect up here. I'm going to protect here for now, just because it looks like we did have quite a large rejection from here. I like to do 2 pips, 1 pip above. There you go. So 10.25, and then 1 to 1. We're just going to do 4 for now, and then I'll adjust it to 2k risk later. Great, so now we've got our area of interest here. We can even, and you guys might be asking, Deb, why don't I just protect this area here? Because price can just simply run through this area, and then I need to readjust my position every time. And this usually does react quite fast. And another reason, This area here has a higher win rate and a lower, no, other way around. Higher risk to reward and a lower win rate. Myself personally, I like to have a higher win rate and a lower risk to reward, and I can just size up on A plus trades like this. Just because psychologically I like to win a lot more than I do win a lot more like money wise. So if I'm just constantly hitting trades and let's say I have one losing trade, I'm gonna be like, all right, cool. I can come back tomorrow, and if I just follow all my rules, my data has given me an understanding that cool. If I lose today, it's no issue. If I lose again tomorrow, it's no issue. I can literally come back next week if I have to, and then just go back on track like I need to. I'm not thinking about make back my losses. I'm thinking about, all right, get back on track and fix the P&L curve. Cool, so let's see what we kind of do here. All right, great, we're tagged in. Oh my days. Okay, let's not worry about the actual dollar amount for now. Let's just take it at 1 to 1, $2,000 risk. So we almost got stopped out there, which was great. This is why it's ideal to never just have a set, what's it called? A set, it's coming to me. A set point stop. Because if you do a set point stop, but it's in the middle of like a fair value gap or something, you're just going to be like, well, what's the point? Because price literally, price just came back into this gap and then just turned around and maybe came a little bit more. So look, realistically, if you wanted to protect up here, that actually would not have been too bad. But we already got our 1 to 1 right here. So this is what we got protected here, right? That's not too bad of an area. You want to be setting your stop loss at invalidation points. If price all the way comes back all the way back up here, I'm probably going to get invalidated. Realistically, should have set it up here. But we're in the trade now and we can't change it. So let's see how we go. All right. Okay, there you go. We hit. So in this case and scenario, we did everything that we could have to enter on good conditions. We can see this was great conditions. This even wasn't too bad up until this leg up. After we got this leg up, this was at 7 p.m. As soon as 7 p.m. open, this is usually when volume comes in around London, but it's not always necessary that it can't come in at 6 p.m., right? So this leg up and then following price action after that, that was horrible. That's not something we can control. We can only control our inputs. Our inputs basically mean entering on clean price action, ensuring that we're getting in on simply the best price possible. Not even the best price, just the best conditions possible. Think about it like this. You're driving a supercar, right? Your tires are warm, the car recently got serviced, your oil just got changed, you're running on E85 or whatever, right? You're running on the most optimal conditions possible. You're going to want to, and let's say you're on a racetrack, right? You're going to want to try hit a top speed. You're going to want to try hit a track record, anything along the lines of that. But let's say it's raining, you haven't got your tires changed in 4 months, you haven't got a service done, and you're not even feeling the best as well. What makes you think that, okay, today's the day I'm going to go try hit a personal record on the track or even anywhere, right? It just doesn't make sense. You want to be doing things that make sense in everything in life, not even just trading. So back to this. We are now +2. Oh, +1, sorry. So that's 2. Correct. Amazing. So you can kind of see that break and retest, they do happen quite often. Let's see if they happen every day this week. Anything else I need to delete? Delete. Great. So this is Tuesday. We are up 2% for the week. Absolutely golden. Let's go to Wednesday. Let's see what we can find. If we can get funded by Wednesday, that's 3 trades. Look, realistically, you can also take multiple trades in a day. So let's say you want to trade Asia, London, and New York. And you catch 1-to-1s in all 3 sessions. You're funded in a day. But I personally just don't like to do that. I like to just take 1 trade a day, call it a day at that. Wednesday. All right. Asia highs. That's a big, big Asia session move. All right, let's go to a higher time frame. I'm going to turn this off now. Okay. Given that we are at these highs and we've had such a strong rally, I'm not too sure if I want to. I'll mark out this hourly gap in case we get a good jump off that, and let's mark out this as a potential target. I'm just not liking how we're reacting off of this, because technically it is a breaker structure, right? Because you can see we end on a strong body, but then kind of rejecting. So I'm gonna look to see what we do off this 1 hour gap in here. Where is 6 p.m? Okay, and this is technically already our protected low. See, if this is gonna short, I'm gonna want to see these two highs get taken, and then this Asia high and then this external high, which I just marked out, get taken and then reverse from there. And if this is gonna long, I want to see clean bounces from this area in here. Okay. So this is a false. Marking things out pre-session doesn't hurt, like we have been doing. Okay. There you go. Week to week. All right, great. So you got your breaker structure down. All right, 6 p.m. Oh my gosh. I'm not liking this. Yeah. No. Okay. When we get conditions like this, you need to be very wary. So let's look at other. That's why we use other time frames to have a look at. Okay, so we got a lot of low resistance liquidity up here, which could indicate that we could be going up. It doesn't look too great, but let's see. As you can see, I haven't moved my protected high down. So our protected high initially was breaker structure down here, and then false break, and then break again here, break down again here. Is that valid? No, it's on a wick. And then you get breakdown here. It looks like we're getting a decent push up. Okay, well, that ends on a wick. So now this is our break of structure. This doesn't look too bad. It just needs to look great. Okay. So when I just said this doesn't look too bad, it needs to look great. This doesn't necessarily look too great at this point in time. Because if we are to be pushing out of this area, we're not going to want to be seeing opposing candles come this strong short. So if we're trying to go long, you're not going to want to see such good pressure coming in short. And as you can see, the long pressure wasn't also the greatest. You can see that this came up, there was a bit of a doji, or I don't even know what you would call that, a doji candle, and then this was alright. This isn't too bad, don't get me wrong about this, but it's just this last candle that was presented in. So what I might do, I might just wait for another break. Because if you're unclear, okay, yeah, that's actually okay. See, now this is where games will be played. Technically, you've got everything met, but the only thing that hasn't been met is clear conditions. When I'm seeing things like this, I'm seeing price break up, it's ending on literally the end of the body closed and I can see it's a big wick followed by an instant rejection, I don't like that. I just don't like that. And you might be asking why. Dev, you've got all your conditions met. Why aren't you taking a trade? I simply just, if I want to see this continue going up, we don't want to be seeing as many rejections coming in. I want to see something clear. I want to see this be able to push up with a strong body close. Like something like this, right? If this was supposed to be delivering out of this hourly gap, I would want to have seen some good strong pushes like this, some good strong body candles. At this point in time, I'm seeing okay candles. Now let me look at other time frames really quick. Like on the 2 minute, yeah, it doesn't look too bad, but the fact that we've gotten so many what would you call these, let's say bearish candles on the leg up, I wouldn't be too keen on it. Now let's look at the 3 minute. Like 3 minute as well, right? It's kind of giving the exact same thing. I'm something on a 5 minute which I could potentially look at. Yeah, look, 5 minute gives it a little bit of a clearer view. You can see that every 5 minute candle that we've broken up on is ending on a wick. You usually don't want to be doing that, too much of that. I'm not keen on it. I'm just gonna, I want to wait for something like this. Okay. So now that we tested this 5 minute gap in here, if we do potentially take a big move up, it could be okay. Let's see what it looks like on the 5. See, I'm just not liking this. I'm just not liking this at all. And remember, guys, if you don't like something, there's no obligation to take it. Okay. Okay, we swept these lows, re-swept these lows. I'm probably not going to get into anything. This just doesn't look too great. No. So we're like an hour and a half into the session and we're kind of just chopping around. Let's see if we do actually get anything nice. Let's go 5 minute. It's like even when you go to the 5 minute, like nothing's great. Let's go back down. Let's see if we could have potentially. So this is what we were looking at before. You can see there's a break up. So theoretically you wanted to enter up here. You would go instantly, and let's say you wanted to protect your impulse. Instantly stopped out. So this is the right way to get stopped out, but I wouldn't say these are the conditions you'd want to get stopped out on. Because if you can simply see that this is plenty of chop, and then you take something based off of this on a breaker structure up here, that's not too great. You'd want to be waiting for clear pushes up, clear breaks up, just so you can kind of see that, all right, great. If we're going to actually be going up, like something like this, right? This doesn't look too bad. It doesn't look too great, but it doesn't look too bad. I would say this is kind of like a B- setup. But then as you can see, we don't even get tested into it. So we get invalidated before we even get entered. Because what we have to do, our area of interest has to get tested, and then we have to come back up into it. We can see our area of interest got tested, but we never really came back up into it. So just because you see the whole system play out, that does not necessarily mean that you need to get into a trade. That is what you would call a pattern trade. You don't want to be pattern trading. You want to be trading based on conditions alongside your criteria. If you're just trading based on, okay, breaker structure, fair value gap, this, that, blah, blah, right? And you're not looking at conditions, then you're going to be going for, it's just not going to work for you. All right, tested. Great, now let's go into Thursday. And look, days like this are going to happen. You're not going to always have great things. Because think about it. We're trading a US-based pair in the London session. You're going to have days where it's very slow. Let's say there is even some sort of big news event or just whatever, right? There is no obligation for this to trade clean. Even in London, even in New York session, there's no obligation for price to trade clean. But if you live in Australia and you're trading the New York session when you can simply just get entries in London session and even Asia session, I just think it's absolutely stupid that you're staying up till midnight or after to do so. Like, as you can see, we're clearly up 2% for the week. People might be thinking, oh, that's not much. But slow and small base hits are what keep you consistent in the long term. If you're always going for your massive risk to rewards, 3R, 5R, 6R, look, if you've got a high win rate and it's sustainable for you, absolutely, I will give you a pat on the back for that. I know a lot of people that have tried to do that and it just doesn't work. It simply just doesn't work. And that's coming from me. I used to hit 1 to 6 every Monday on London Session NQ, and that's all I would trade for the week. That's it. 1 to 6 on Monday, call it a day. If I won, I won. If I lost, I lost. No issues whatsoever. So I know I've done it, but I'd much rather prefer this. Cool. Let's go to, what was this day? Wednesday. Thursday. I also trade London Session live within my premium group. If you want to catch some of the moves that we catch, click the link in my bio so you can kind of do it with us. So let's have a look at this. What is going on? Okay. Very big shorts. Very big shorts. We're delivering out of this gap here. We could potentially, pardon me, sorry, I got the hiccups right now, man. And then we could be delivering out of this gap in here. You've got these kind of lows right here. What is Asia lows? I think those are Asia lows. No, those are pre-session lows. These are Asia lows. Great. If price wants to come back up here, resweep this. I don't know about that one. Oh no, that's pretty good. That's pretty good. You got an hourly, you got a 4 hour in here. So I realistically do not think we're going to be coming back up there. Maybe we come into this gap, that could be okay. Yeah, targets are usually Asia low in here, and then if not, we can probably, yeah, usually this is just going to get taken out and then we're going to come straight down into here. So let's see what we can do. 6 p.m. You can see that, okay, what's going on here? 6 p.m. you can see we swept Asia lows. I'm not looking for reversals from here, right? Another thing, you can have a daily bias, but if your daily bias doesn't really align with what you want to see happen, you don't necessarily need to enter. So what I'm thinking, we swept these lows, we can potentially come back into this hourly gap here. So let's see what we do. I also have a step off time. Oh my gosh, relax. I also have a step off time of 2 hours on being on the chart. So now let's say that we've broken past the low and there's a clear DOL below. We can simply just look for a breaker structure and we can just look for the next 3 steps. I don't necessarily like that, but it is part of my system just because you're not necessarily delivering off any gap. But if there is a clear draw below, you can take it. So you can see that all these breaks down, it's ending on a wick. Okay, wait, hold up, chief. Look, that's not too bad, but how deep of the retracement? I'm not too keen on it. So let's say you did take that. Protect it up here. Yeah, let's say right there. 1 to 1. I wouldn't have taken that. I simply would not have taken that. So let's see. There you go. So let's keep playing this out. So far, we've really not got anything too clear. This is kind of looking like how yesterday was looking as well. Not very clean, not very nice. And even if I look at a different time frame, right, it's probably just going to show us the exact same thing. 2 minute even looks worse. It looks like now that we're getting a little bit more of a steeper drop off, but that doesn't necessarily mean that we're going to get a nice entry. See, let's say you wanted to take this, probably could. I'm probably just not going to take anything today just because this does not look too great. And you can see that the DOL target is 0.65. That doesn't make sense. If this works out, yeah, great. But do I like it? Oh, see, like, now I wouldn't want to take that. I really wouldn't want to take that now. The whole trade would have been invalidated anyway. So let's, yeah, there you go. You can see we had our order here, but then our theoretical stop loss got ran through, so it doesn't even count. And that is 8 o'clock. There you go. So this is another day of trash conditions. there's really not much we could have done in this case and scenario. We waited, we protected our capital, we had a potential down here if we didn't even get tapped into, so that's completely fine. So far it looks like we might be ending the week on a +2 or +4, 40 or 60%, 60%, yeah, 60% passed on the account. Let's kind of have a look into Friday. This Thursday, yeah, Friday, great. So now most of you are thinking, oh my gosh, Dev, I could have just passed this normally targeting a higher risk to reward. The whole point of targeting a lower risk to reward is for you to have a higher win rate. If you have a higher win rate, then you're going to be winning more and it's not going to test your psychology as much. All right, let's have a look at this. In 1 hour. Okay. I'm just going to mark these out. Okay, I'll mark them out individually because that's fine. Mark them out individually. This gap looks like it could get respected, maybe ran through, who knows. So as you can see, Thursday we did short, but we only happened to short right after we got off. So what are you going to do about that, right? You can see there's an order block here. We're very rejecty to these sides, so we could potentially start sending up. 6 p.m. and where's Asia lows? I'll mark Asia lows a minute before we get in. Okay, great. So this looks like this will be Asia lows. Oh my days. So we completely ripped through Asia lows, so potential for reversal, continuation, maybe. We're not really delivering off a higher time frame gap. Are we delivering off anything? We're not even really delivering off anything to kind of take a short. No, not necessarily. There's not much for us to be delivering short from. So, do I want to take this short? Okay, so usually what I do, if I have a breaker structure from Asia lows, I always want to wait for another one, just for a confirmation that, okay, if we're going to go short, we're going to go short from here. So if we break past this, I might look for shorts. But then if we break through this, I would be looking for longs. I actually would like longs a lot more than shorts, only because we're delivering off a gap here, and I also don't like taking continuations as much. All right, great. Cool, hold up, chief, hold up. So as you can see, we've got our breaker structure here. Let me look at other time frames just to confirm. Oh yeah, okay, that looks absolutely golden. There you go. Okay, this looks absolutely 5-minute inversion, if that's right. Yeah, so higher time frame area of interest, there you go, and Asia lows, surprisingly. Oh my gosh, that's like too good, golden area. Higher time frame area of interest, so you got Asia lows. I'm gonna mark this out at SSR right now. Lower time frame break, you've got your break, wait for lower time frame area of interest. So realistically, you can take this gap, not this gap, this order block right here, given that there is a good amount of pressure going up, but I might just wait for a gap to come up. So let's see. See, that would have been very good entry right there. Perfect. Let's take this, protect this. Oh, realistically, you can even just protect here. That's fine, because technically this is the leg that created our area of interest. and one tick above. Is that one tick above? Okay, now one tick above would be 25. So you always want to do one tick above just to confirm that we are continuing up. Usually you might get spread in a little bit higher, but that's absolutely fine. I really like this. You also want to just look at other time frames to see if there's any other liquidity which price could come back and retest into. So 3 minute, if 3 minute comes all the way down here, I don't think this is going to continue going long anyway. 5 minute, it's good to protect this 5 minute gap here. If it, like I said, if it comes all the way down, sorry, hiccups, man. If it comes all the way down into that 5 minute gap there, it's not going to be too hot. Realistically, if you wanted to protect down here, 35 points, just to protect the 15, you would also be protecting, you'd be protecting half a 5, right? So, and I know, like I said in the previous trade, I think it was on Tuesday, why would you want to be protecting half the gap in here, right? Just because there is liquidity. But based on this, based on the amount of, based on like the, as they would call it, a V shape, the V shape out of this 1 hour fair value gap, I don't think that this is going to come all the way down 35 points. The structure should hold. And if we technically break past this low, we have a change of character going down anyway. So I'm actually quite confident in taking this as this is. Great. There you go. Right, you can see no drawdown one. We hit, jumped in 32, jumped out 42. 10-minute trade, 1-to-1, funded within the week. So as you can see, in 1 week, we took 3 trades that all happened to work out in our favor, which worked out really good. The system we followed was very, very, very simple as well. It was honestly nothing too crazy. You just want to wait for a higher time frame area of interest like we did, break a structure, lower time frame area of interest, and then IC entry. You can see it was pretty uniform in the way we were taking it. This usually works on all account types. If you were taking it on, honestly, you can do this on all of it. I've done this on Top Step, I've done this on Alpha, I've done this on Lucid. It works on every single one. So it doesn't really matter what you're doing. Using the advanced risk methodology, you will pass the account. As long as you're just taking the most A+ steps possible, it's going to be absolutely fine. And you can take this during Asia, you can take this during London, you can take this during New York. It does not necessarily matter. I have students that trade New York, they got funded and paid out. I personally trade London, this works on London, and I also have I also have other students that trade on Asia session. They all trade NQ, and this works on NQ. I've backtested this with all my students on Forex pairs, stocks, NQ, ES, blah, blah, gold. It works on everything. So it doesn't matter what you're trying to trading, just use the system to work out for you. If you want to be watching me trade live, click the link in my bio, and yeah, come back next week to see what we can do next week.